Hi there, theorist Neil here again. Welcome to Option Theory and our daily cherry bomb trade. If you're new to the series, this is not one of those where you have to go back and watch the old videos. This is an immersion class, if you would. Really an immersion partnership. Really, I'm not teaching, we're just doing. And that's why we are immersing ourselves in trading options and the how-to. We are using the Thinkorswim platform. You can use whatever paper trading platform that you'd like. But I invite you to join us. So today is March 4th, 2020, and we are going to put on a paper trade today. I want to move you over to my screen though, because yesterday's cherry bomb was with futures, and we learned a little lesson that if you're in a simulated trading account, you don't have futures options on futures access. So we found out the hard way, had to re-record yesterday's video acknowledging that fact. And so yesterday at after 4 o'clock, when work was over for me, I got on the Thinkorswim mobile app and used the help support feature. There was a built-in chat. The hours of operation were, I think, 6 a.m. till, and this is Eastern Standard Time? I'm not sure. We'll double check again. But I put in a chat message saying that I would like to have the futures options on futures enabled. And I would say within an hour, by the time I got home from my commute, they had taken care of it. So we're going to move over to my platform now. Here's Thinkorswim. I haven't logged in yet. There it is, logging in now. Let's see how long the updates takes, if it's going to update anything. All right, that's not too bad. Excellent. So over here in this support chat, we showed this yesterday as well. Okay, so it's available, live support chat rooms, live support, here it is, 6 a.m. to 7 p.m. Central Standard Time. You can see here I have my chat from yesterday. Okay, so at 4:04, 4:05-ish, 4:04, I made my announcement that I'd like to have it done. Can this be done? And by the time I got home, it was taken care of. So with that said, maybe we'll go back and take a look at that trade, but that's not today's cherry bomb. Today's cherry bomb, sent this morning, comes from Tom Preston. You should sign up for that cherry bomb email list so you get these trade emails way before my videos come out. You can set it up, you can play along, you can come up with your alternative trade if you don't want to follow this trade exactly. So it is, let me pull it up on my other screen here. It is a trade that looks at the stock of the company GM. So let's pull up the chart for GM. This was yesterday's trade on corn. It looks like it was an up day for corn, so that would have been profitable for us. Today's looking down. All right, so GM, General Motors, right? Okay, so we can see that it has been hurting. It is at a almost near low, right, for quite some time here. In the email, it talks about it being at a low for 3 years. So with that said, the IV rank for GM is about 81, means the profit potential is better for selling options. The options are rich. And another reason we want to subscribe, you'll see Tom talks about the put skew in there as well. So another reason to subscribe, you'll get more value from those emails too. But with that said, we're going to take a contrarian position, as Tasty Trades often are, right? Most people tend to go with trends and say, hey, look, it's going down, we're going to go down, right? So this isn't necessarily an uptrend yet, I wouldn't say. I don't think any technical analyst would say, oh, it's up now, right? So we're going to take a contrarian position. We're going to get paid more handsomely, thanks to volatility, right, to do so. So let's go over to the Analyze tab. And with that said, we are going to, choose the 23 days to expiration. Nope, I lied. 36, that's the one that the email says. 36 days to expiration. And it's going to be the short 27 put. Now, this is pretty cool. I'm seeing it's pretty darn close to what tastytrade seems to do for their naked options. It's near that 16, so they probably could have gone with the 15 delta or the 17 delta. But if you look at the bid-ask spread on this one below it, you can see, because it's one of those 50-cent ones, you're going to see that it's less liquid. So the 27 makes the most sense. You've got this 53 is the bid. So if we click that, that's going to put in a simulated order here of one contract to sell a put with this 36 days to expiration on GM, right? So short put. So let's take a look at the risk profile for this. Okay, let's scroll this way. All right, and that's a little wide. Okay, all right, so where is the current price? 30.52. 30.52. All right, I'm not sure why there's no mark here. That's a little weird. All right, so we can see we're getting paid and we have room to be obviously right directionally. We can be wrong directionally. I've reviewed this in another video where we talk about our options riskier than stocks as investments. I'm going to link to that above, whatever direction that is. I'm pointing, but you can't see me because you can only see my screen. Somewhere near the top of this, you'll see a card that slides out for that video. Okay, so we're going to route this trade by right-clicking on it, choose Confirm and Send, and we can see here that the max profit is the credit that we've received, 53 cents times 100, right? So $53. The max loss is $2,647. Okay, so remember what we're doing here with the put is what we're saying is, hey, if it goes below the strike price that we chose here of $27, right, then we're willing to buy it, which, remember, the trade price of it right now is $30.52. So we're basically agreeing to pay something maybe that you'd be interested in buying now for less, for less than it is now. Let me get it on sale, pay me to do it, right? So that's kind of the neat thing with that. Plus the probability is pretty darn good. We have what they say is a P50 of 86% of making 50% of this credit, right? And that's usually the profit target that we're shooting for with the tastytrade approach, okay, is to take this kind of profit at 50% of its max profit. So let's say, though, this is, I guess, a bonus value here, that this was too much risk for you, okay? That your account size, let's say let's say you're getting in, you're funding your account with $2,000, maybe it's at TD Ameritrade, maybe it's at Tastyworks, maybe you're doing it at Tastyworks because you want to get in to potentially win your Tesla that they're giving away. Okay, so you might not have a large account size. So what you could do is turn this into a vertical, all right? And we're looking for something that's a little more liquid. So what if you did a $2 wide, right? So take a $2 wide. You don't want to sell it though, you want to buy that one. Okay, we look at that risk profile now. Let me take it this way. Your max loss is not, it's not $2,600. Your max loss is $180. So that would be a much more tolerable portfolio position, okay? You really want to be shooting for the 1 to 3% of your portfolio at risk. I think at any one point, if you're trading small, as they say in the tastytrade approach. Okay, I'm not going to do a vertical. I'm going to put it in as a naked put as we had before. And right click, confirm and send. There it is. Check in our monitor tab. Take a look at our working orders. Okay, we can see that there. So this hasn't filled yet, of course. And we can see our other positions. We're not going to review those now. On Mondays, we review our positions and anything I've closed over throughout the week. So hope that was beneficial to you and that you enjoy trading as much as I do. So I'll see you in a future video.